Good morning, one and all, and welcome to this morning's video. So, this morning I just have the one pair on watch, and that is pound Aussie. The market looks like it's kind of finding its feet across the board, so to speak. So, I'm just going to let the other pairs and the other opportunities across the market shape up. But the one that looks most likely to shape up today, in my opinion and experience, is this one, pound Aussie. What I'll be looking for from this pair today. So, I'm going to break that down for you now without any more further ado. So this is about as textbook as it gets, really, where the structures that we look for are concerned. So we have this high here, we have this wick, and to the left we have this. Okay, you could argue that this is more prominent here because it's not actually a volatility wick. Okay, whereas this one may be just volatility just because of the size of the wick. But regardless of whether it's this one or this one, we have a 1, 2, 3 reversal structure leading into it. We don't commit at the first time of asking. Okay, so we have this evening star formation here. We move to the downside. Price fails to commit to the longer term direction or the daily time frame direction, which may be a move down to here to take out this low, especially when we have a low that near missed to it. And one of the reasons, well, there could have been two reasons why it was doing that. Either this was some kind of running channel. Okay, this was just a move to trap the sellers into the short, and then we were potentially looking for something like that to push higher. And the question I would have asked myself is, would there be a reason to? Well, yes, because if we measure this move from here down to there, you can see that we've retraced about 80 to 90% of the move. So that could have been a move to trap the sellers into early, and then we get something like this, which builds the volume to break out to take out this high, okay, which we, in the longer term, are likely gravitating back towards. But once again, that doesn't mean we can't capitalize on shorter term moves in the meantime. However, what it looks like price actually did was break a little bit higher because there was more liquidity set up here, which needed to be filled after this for it to be able to move to the downside. Okay, so we take out that liquidity and then we get the impulse correction continuation to push lower. Even here, because of the near miss to this low here, this could have actually been some kind of larger structure. Maybe we get something like even like that before we push higher. But what we've done now, interestingly and crucially, is we have broken below all of this consolidation here, okay, the base of it here, and we seem to be consolidating afterwards, which is implying to me that price did not find enough liquidity at the start of all of this, which is, if it was going to push higher, that would have been where I would anticipate it doing so. So to me, that is starting to look now like an impulse correction continuation to push lower to at least take out this low, this prominent low here, and likely gravitate back towards here to take out this low near miss too, and then potentially maybe we're moving higher from there to fulfill that longer term direction that I was talking about. Okay, so as we zoom in, just going into a little bit more depth and a little more of the thought process, seeing as I only have the one pair on watch. As we zoom in, I'm now analyzing the parts of this puzzle. Okay, so this low I'm not concerned about because one, it's not sharp, and look how we moved up from there. Okay, so I'm not too concerned about this. The reason I've got my ray line here is because that is a prominent low. It was sharp, and we got a sharp move from there. Okay, so because of that, at this moment in time, price doesn't necessarily need to come up to this high or to the high above, which you'll see on the 1 hour chart, because these highs are sat above a sharp move. Okay, so we may only need to come up to this high here, and the clue might be that we're near missing to that area. Okay, so we have the near miss to here, near miss to here. Okay, that's implying that this might be where the volume is because that's where we're near missing to, and that's likely because this high is sat above here and is not necessarily, I use that in quotation marks, necessarily relevant anymore. Okay, so what I'll be looking for with all of that in mind, quite simply, is I'm going to be looking for a tap into, I'll be looking for a tap into this area of value here. Okay, so we have a bit of consolidation there, and then we get a bit of a a sharp sell-off. Okay, so that might be where the liquidity is. When you could argue, this is kind of sharp there, but when you have a near miss, it's usually what price is near missing to, which is the key, is the clue to where the value actually is. Okay, so, and as I said, that these highs are sat above the previous low to the left, so I'm not bothered about them. So what I'm going to be looking for is I'm looking for a tap into this area. If we do start tapping into these areas and then moving to the downside, even better, because if we tap into that, and even if we tapped into that as well, if we did tap into that and we started breaking back below here, then we've just washed out even more liquidity, so even better. Okay, but what I'll be looking for as a minimum, I'll be looking for a price to tap into this area of value, a push down, a 15-minute continuation afterwards, and then I would look to get short either on the break of the correction, or if I could get an entry in it. The stop losses are slightly larger with pound Aussie. If I could get a risk entry within it, then even as a minimum, we have a 3.9 to work with to the low. I don't use the take profit in these scenarios, so unless it's a minimum of a 5-1. So then I would be targeting, then in this instance, I would be targeting that low there. Whether we get that in one go is a different story altogether. If we just measure, let's just do this on the fly because I haven't done this yet. But so I'm measuring the impulse, okay, down to the base of this correction, and we assume that the continuation leg out would be of a similar length. That would take us down to there. And of course, if we measure it on the break, because we know that the volume that's been generated within a correction can dictate how far we go, that would take us down to that area, which just so happens to be bang on 90% of that move. So that makes contextual sense as well. But so that's what I'm going to be doing there. That's what I'm looking for. I have an alert set just below the area of interest to see if we move up into that area. This may just trickle around. It may, just to touch on it, another thing to note. Okay, so when we get a descending structure like this, it's very often the case that what will happen is we won't get something like this. It's very often the case what we will get is something that looks more like that. And then we get that. Okay, so this descending nature is the clue that we may get something like this. And what we're seeing now is actually just part of a middle section, which then pushes up, and then we get more of this structure. Okay, you do see that a lot when the start of a larger correction starts like that. So, and you might be thinking, well, why are you looking for what you're looking for today? Well, the reason is because we don't know what the market's going to do. We don't know what's going to happen next. We could be sat there waiting for that, and I could disappear and do other things, and then the market does exactly what I've forecasted, and then you go, oh, there was a trade there, and I didn't capitalize on it. Well, that's because that's the amateurs are thinking. They're thinking in terms of absolutes. This will happen, that will happen. We don't know what's going to happen. So I know what looks likely, what I've just illustrated, but that might not happen. We might just get what I'm looking for today. And if that happens, I don't want to be sleeping on the job, as it were, and go off and do other things when there's actually a decent opportunity to actually make a few percent. And even if we do tap into this, okay, and we get the move to the downside, and price comes down, it comes back up, it starts to tap into that. Even then, you've still got the opportunity to make a few percentage on the way down. So there's always opportunities to be had, and it's just for us to stay sharp, stay on the ball, and capitalize when the market presents them. But that's what I'm going to be looking for from these pairs today, folks, or from this pair rather. Have a great day, have a great weekend, and I'll see you in the next one with another one of these videos. And if I've placed a trade on this pair, then of course I will bring you that by way of a recap, whether I'm in it, whether I'm not in it anymore. But for now, speak to you again soon. Enjoy the rest of your day.